So this morning I posted that I made a really nice trade the last couple of days. So Jordan, I get my nose is running. Jordan, alerted us to the fact that Bitwise, and I hadn't even seen the news until Jordan posted it in his live stream. I saw it. So Bitwise had a top 10 crypto fund. So I bought like down here somewhere, like right after Jordan said that. I think it was right through here. It might have been like 36. I think I said 26 one time. I think it was actually 36. Anyway, I just bought a tiny amount. I just threw it in my fund, threw it in my ETF account just to have some exposure to some of the alts, and it blew the heck up. And so I sold it very first thing this morning. I went, okay, this is insane, because I was looking at the premium level, and the premium had just, like here I was okay with it because Bitcoin was on the rise and the premium was just blowing up. But this morning when we got up to 200, I sold at 197, and it just tanked the rest of the day. So people were asking, how on earth did you know to do that? Like how did you know the correlation? And what I gathered was, I guess people don't understand ETFs, or there's some confusion about how ETFs work. So let's talk about that. Actually, let me pull up Bitwise. Hold on. Bitwise ETF. Let's just go pull up the ETF and I'll show you on a graph. It's probably a better way to do it. Look at their graph. Bitwise crypto ETF. Right here. Look at the funds, Bitwise, crypto, 10 funds. Okay. So this blue line right here is called the NAV. That's net asset value, I believe. So this is the underlying value of assets held by the ETF, right? And so what happens is if the ETF that you're involved in, if these assets are a hot commodity and the asset prices are moving up, well, people are going to come in and speculate, and intraday or within a day or within a short period of time, they're going to buy a lot of this ETF. Now, the ETF hasn't had time to make settlements, so ETFs actually typically use a third party. I think it's called an authorized party to go buy the underlying assets necessary to fill out their ETF. But nonetheless, so there's a process. So money comes flowing into the ETF. They take those funds and they go buy the underlying asset, but it's a settlement later. But if you have a really hot commodity coming in, people will bid up the price, and there'll be a premium on it. And then the same thing happens with ETFs that are kind of beat down. So like you see this in energy. Energy ETFs, sometimes the NAV is way above the price. That's called trading at a discount for ETFs. So right now we're trading at a heavy premium on all the crypto. So a Grayscale or Bitwise, they're all going to be at a pretty premium because the underlying assets are going up. But whereas like an energy one might be down, right? So the NAV might be above the market price of the ETF, which means it's trading at a discount. So it's the two forces in play. You get a bunch of sellers that push the price below the NAV. It takes time for the ETF to go sell assets at market. So for a while, the market price of the ETF may be well below the net account value, the net asset value. And the same thing is true on the other end. Now, this was just insanity because this was the initial pop of people getting in here was just nuts. And so, I got really lucky. Like I bought this thinking, all right, cool. I can buy this at 36, and it's it should 10x through the course of our whole bull run, and it like nearly 10x on me, at like 7x or whatever it was. A couple of days, and so I'm gonna dump, and so did everybody else. Like everybody else figured that out too and dumped today. And when it gets when this thing closes, when we get back within, like we're trading at, so whatever the net account value is right now, it's 2032. You have this premium level, this premium percent. So if we're trading at like 1.5 NAV, which would be like a 50% premium, that's more reasonable to me. So we get back down to something like even 2 times NAV, right? Get down to $40 or something where we're twice. Now the NAV is going to go up because the value of the assets they had coming into this has gone up. That's what that little blue tick up is, and then they're also going to be going and buying more to add. So, when this closes, when that gap closes to a reasonable level, it'll happen a lot when we consolidate. So when the underlying asset is going up like this, when the underlying asset's doing this, people are going to be pouring money in. So ETFs that have underlying assets that are moving like that tend to act like almost like a little bit of a leverage trade. It's like a 1.5 to 1 leverage trade because the premium is going to be going up. But what happens if Bitcoin were just to sit right on this trend line right here and just go sideways for 3 months, you better believe that the price, this is coming down to like, you know, right above or right at NAV, because the underlying asset isn't moving. So it'll eventually equalize. So what's probably, obviously, I think all of us understand how the market works, right? So you get these expansions, and then you get consolidation and expansion. So we're going to have a period of consolidation, maybe a little bit of a dip somewhere, and that premium is going to come collapsing down. So anytime you see like this, and this is it's a great ability for us to trade this too, who are kind of more aware of what's going on. I should have bought a lot more of it than I did. You know, if I knew this was going to happen, I would have for sure. I just bought a tiny amount, but you know, but we can watch that premium, and this is true on Grayscale or any of the other ETFs that we're watching in the space. So just something to keep an eye on. I hope everybody, you know, hope that was valuable. I don't know if I need to explain any more about how this works. I mean, the biggest thing, just to keep it as simple as possible, the biggest thing is these ETFs don't go buy Bitcoin the moment you buy that ETF. Right, or whatever it is, whatever the underlying asset is. They don't. The very moment you buy that ETF, you're buying it at market from somebody else in the market. They're you know, paper to that ETF. So they don't settle up until sometime after that and go buy the underlying assets to match. So you know, these things can move wildly. An ETF can move way off of what the underlying assets are in a day based on just, you know, speculation and front-running price. But yeah, so I don't know if Bitwise is available short or not, but yeah, I mean, I wouldn't try to shorten this because it can, you know, it can rip in your face. Bitcoin makes another little jog up, and this thing's going, you know, up. But I'll be, you know, a good way to trade this is during expansion. So you buy in consolidation. So this thing's gonna drop, like it should, in theory. This should come back to probably closer to $40 or so down here. So you let this drift downwards. So if Bitcoin just goes sideways, this is gonna drift down to 40 or so. You let this drift sideways, and when Bitcoin's looking like, you know, we have a good, maybe a conquer the market style setup or some other, you know, really good setup, then you re-enter this, and the next expansion phase you get out, right? And then you wait for the, so if you're going to be actively trading, might be a way to look at doing it. Yeah, there's definitely a lag. Exactly, Henry. There's a lag. So when money comes flowing in at market, you're not buying the underlying asset, you're buying the ETF. And the ETF then goes later and buys the underlying asset. So all you're doing during the day, when people are trading this during the day, is they're trading the ETF, the paper for the ETF, ownership of you know, a part of that ETF. You're trading that around in the market. And the market price can be wildly different, as you saw here. The market price can get very disconnected from the underlying asset price. Like the underlying asset price looked like this, right? But the, you know, the market is well, it's more like that. But you get the idea. The market can disconnect a lot in a short period of time and then come back. So yeah, I mean, ETFs are like, you can do the same thing with Grace. Like, I haven't trimmed it in GBTC. I mean, I thought about it up here because I know for a fact. Like, I don't even have to. Bitcoin is not gonna go to $150,000 in December, right? So I thought about trimming some here, but I'd already taken out that little, you know, whatever, BITW, BITW. I'd already shaved some of that. But I thought about it because I know this is going to come down as the premium calms down. But it, you know, it's not, to me, it's not worth messing with that because that's not an account I'm trying to actively trade it out of. I care more about the alts. Like this, I saw this coming a mile away. Like I was busy today. I probably should have saw. I knew for a fact this is going to come down to like, you know, 150 or so. As soon as you get those periods of expansion, and the ETF is going to gain more than the underlying asset when that underlying asset's going up, and then when the underlying asset, even if it just goes sideways, when it consolidates, your premium is going to get depressed as people quit, you know, buying and speculating, you know, rapidly, and as the ETF then goes and purchases the underlying asset to match as well. All right. Thanks. That's what I meant. Re-enter. Yeah. How many days was the big lag and move between BTC and? It was like on par, right? So this thing came online, like they put it on the market December, like it was available December 2nd. So you look at when it spiked big starting December 15th, and then it got really away from us this morning. So December 14th through 17th. So let's look at the Bitcoin chart, December 14th through 17th. Yeah, so this is when we broke to the all-time high, right? So 14th, it was starting to ramp up as we were coming into the all-time high. The thing exploded out of the all-time high. So this is where, you know, the Bitwise chart is going to look a lot like this. But this is like obviously a much bigger percentage move. So, you know, I got fortunate and sold at 197, which is really, 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 really close to the top. But that was pure luck. I just knew I was going to sell this morning because I knew this was going to explode, you know. I double checked. I was like, I had actually planned to sell in the evening yesterday. But I was like, I just got busy and I didn't really worry about it. And Bitcoin was still moving up enough that I thought it would continue to move up. But this morning, when I checked it, it was 200. I was like, yeah, I'm getting out.